Hello and welcome back to the Volunteer Income Tax Training Series. My name is Chris Moon. I am an Associate Teaching Professor at Iowa State University in the Ivy College of Business. This video is going to focus on the Earned Income Credit. So we will talk about what taxpayers are eligible for this credit, what the credit is, and how it works. All right, what is the Earned Income Credit? It is a credit that is available to taxpayers who do not have a lot of income. So generally, the taxpayers that qualify for Earned Income Credit have really low income for their household size. Just as an example, if you are a single taxpayer, so head of household with 3 or more qualifying children, your earned income in AGI must be less than $61,555. So, imagine being a family of 4 or more and having only $60,000 in income. So you can see that this credit is designed to kind of be a boost for those families. These qualifying taxpayers can receive a refund even if they don't owe any tax. So a lot of times what we see with the Earned Income Credit is that the refund that the clients are receiving is in excess of what their tax was that was owed. Sometimes their tax gets down to 0 and then they still get the Earned Income Credit refund. Sometimes even if they didn't have any tax withheld, they can get this refund. So we talked at the very beginning of this series about some clients who may not be required to file a tax return but may want to file a tax return. Someone who qualifies for the Earned Income Credit is definitely one of those people. All right, so who qualifies for the Earned Income Credit? If you look on page I-4 of your 4012, it is going to go through each of the sets of rules for the Earned Income Credit. There are general eligibility rules for everyone. That is listed on page I-4 in Part A. Taxpayers and qualifying children must all have Social Security number that is valid for employment by the due date of the return. If you are separated from your spouse and not filing a joint return, there are certain requirements that must be met. You must be a U.S. citizen or resident alien all year. You cannot file Form 2555 related to foreign earned income. Your investment income must be $11,950 or less for 2025, and you can't be the qualifying child of another person. The rules for taxpayers with 1 or more qualifying children are listed in Part B of page I-4 of your 4012, and that is the child must meet relationship, age, residency test, and joint return test, but not the support test. The child doesn't have to be your dependent. A qualifying child can't be used by more than one person to claim the Earned Income Credit, and the taxpayer cannot be a qualifying child of another person. The rules for taxpayers who do not have a qualifying child are listed in Part C of the page I-4 of your 4012. If you do not have qualifying children, you must be at least age 25, but under age 65 as of December 31st. I will tell you, this rule has varied during the COVID years, so sometimes I think we're far enough out that people have quit asking questions about it, but the age restrictions during COVID were loosened or maybe even eliminated, but they were definitely loosened. And so sometimes people have asked, well, I got the credit before, why don't I get it this year? And part of the reason could be the changing requirements that we had during those COVID years. it's not just true for the earned income credit, it's true for other deductions and credits as well. So just that's why we like to do new training every year, because these rules are, they change every year, but especially since COVID, we've had some fluctuating rules with different things. All right, if you don't have a qualifying child, you also cannot be the dependent of another person. You must have lived in the United States for more than half the year, and you can't be a qualifying child of another person. So also on this page I-4 of the 4012, it gives you Part D of this chart that I'm referring to right now, gives you the income limitations. So I'm not going to go through each of those for you. I will tell you TaxSlayer is automatically going to calculate this earned income credit for anyone who's qualified. So the reason that you might need to know these rules is if the taxpayer isn't required to file a tax return, but they may qualify for the earned income credit, you'll want to go through this and on your own see if they'll qualify so that you can maybe help them out with a refund. So take a look at Part D of that chart to see the income limits, but again, TaxSlayer will calculate it. Some really common earned income credit filing errors are incorrectly reported income, people not having appropriate Social Security numbers, or not having Social Security numbers or having them incorrectly reported, claiming a non-qualifying child. I'll just tell you at our tax clinic, we don't see a ton of earned income credit, but we do see some. And a common mistake we see is people who are now filing as residents trying to claim the earned income credit when they're not entitled to that, and they oftentimes do not have qualifying children. So also married taxpayers incorrectly filing as single or head of household is another common mistake. I talked in the income section about the difference between earned and unearned income. So if you look at, you look through your 4012, there is an earned income table for a complete list of earned income and what it includes and what it doesn't include. I'm not going to read through this chart for you, but we talked a little bit about that. Generally, your wages, salaries, and tips are definitely going to be earned income, whereas dividends and interest are not earned income. So taxable income does not mean earned income, and just making sure if a taxpayer doesn't have earned income, only has unearned income, and wants to know why they don't get this credit, it's probably because they don't have earned income, or sometimes they have too much earned income. Making sure that the child that you are claiming for earned income credit is a qualifying child is really important. Tab I of publication 4012 and also the lessons on Lincoln Learn are really good about going through who a qualifying child is and who it's not. You can also do in TaxSlayer, there is a due diligence checklist in TaxSlayer. So if you just want to verify that the taxpayer is really entitled to the earned income credit, go through that due diligence checklist and just make sure that you've done it. The most common mistake really is a child who doesn't meet residency or relationship requirements, filing incorrect status, income and expenses from self-employment being reported incorrectly, Social Security numbers, things like that are common mistakes. So if you are trying to get the earned income credit for the taxpayer, just double check that you've got all of the information accurately reflected. All right, so I already went through this when I was going through the chart, but the age limit and the income limit for people without children is really low. For a single individual with no qualifying child, their they must have earned income less than $17,640. So you can see for someone who is single without kids, their income has to be really low to be able to qualify for the earned income credit. Calculating the tax credit, lucky for us, we don't actually have to calculate it. There are worksheets on how to calculate the earned income credit, but TaxSlayer is going to do that for us, and we can actually look on the tax return to see how it was calculated if you need to explain that to the taxpayer, but it will automatically be calculated for you, and the forms will show you how that calculation is done. All right, so we talked about earned income credit. The computation is based on filing status. If you have qualifying children, how many you have, how much your earned income is, and your adjusted gross income. There are very limited circumstances where people with no children will qualify, but their income has to be really low. So it's just really important to make sure that as you're doing the intake form, again, that you go through all of this information with the client and make sure if they are going to get this credit that they do qualify. And if you want to double check yourself, go ahead and do that due diligence checklist that is included in TaxSlayer. All right, thank you.